The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 14th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. And if you can't dial in, no problem. We have you covered. All you need to do is let those fingers do the walking. Send me an email, steve@tfnn.com. Of course, inside the Tiger's Den. Well, any ping will do. So let's go ahead and get this show started on terrific U.S. Open Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down 17 points, 25,183 is the print. S&P's up 7, NASDAQ 100 up 72 points, that's 1% to the upside. Russell's up 3 points, semis are up 9 points, about 0.7%. Trannies are up 16, spot volatility index down 88 cents. It may have taken out the lows. Of course, it'll be the end of day reading. We were looking at a rising bottoms pattern that was present. That may have evaporated, but it really will be an end of day reading. Silver's up 25 cents, gold's up 6. Lead the charge to the upside. You've got Google. Dollar-wise, $20. Mercado Libre getting in on the fun up 16. Booking Holdings up 15. Amazon up 14. Netflix up 12. To the downside, Madrigal Pharmaceuticals up 15. Waters Corp down 11. BlackRock off 9. Tailored Brands down 21% or $7 out there. So certainly there's things to look at. I, of course, want to look at what you want to look at. So what is that? I think there was not a request out there. Well, there was a question mark, NDX 8,800 points. So let's first take a look at the Dow and what it's doing, what it's not doing, levels that you ought to watch. Now, I'm going to start by take a look at the Dow Equity Futures contract, which at this stage in all the indices, or I should say all of the equity futures contracts, have in essence done the same thing, which is just come down and test a level of support today. Of course, you and I know that support is Stevie's red line, a.k.a. the oscillator and change line. That is the point in time in which the price oscillator, bottom panel of my screen, difference between two exponential moving averages, in this case here we're using 19 and 39, is going exactly sideways. Why it works? I don't know. It just works. And we know how well it works, both as support and resistance. So the actual number, if the Dow is going to go ahead and pull back, have some more retracement to it, is 25,151. That's the number to be paying attention to. What do I think? I think the Dow is headed higher, not lower. And I will maintain that thought as long as price stays above Stevie's red line. You see, in the Dow Equity Futures contract, what it did several days ago, and in essence what it's also doing today, is testing this green dashed line. I know you're saying to yourself, how many lines do you have out there? Well, we have as many lines as we need that assist us in trading. And that green dashed line, that happens to be a line produced by Tommy DeMark's system out there. And that takes a look at the March 14th high. Once price got above that, it said, okay, I am above resistance. I want to run higher. The Dow Equity Futures contract has a rising price oscillator above zero. It wants to continue moving higher. That is the message at 1:11 in the afternoon. You and I, we can go take a look at the other equity futures contracts, and I'll give you the number for the Dow as well. We'll do that in a moment, but there was a question about, hey, the NDX 100, 88 plus, wherever it's headed to, and yeah, that is the answer. Take a look at the NDX 100. Had an opportunity last night. Of course, it did not create a bearish reversal signal, but on a daily basis, it was moving higher, doing less relative energy out there. Well, that pattern seems to have gone kaput. What happened in overnight trading? What happened this morning? Price was just testing Stevie's red line. That number 72.2663. In essence, that would be the number to be watching today. What does the NDX, or what's the NQ? I'm taking a look at the NQ. You know, where does it want to head to out here? And I'm going to jump around with different industries that way because it will cover, you know, all different areas out here. To answer that question, I just simply come and take a look at the TAS market profiles when I want to understand where is it the NQ that is headed next. And the answer is 74.8641. Now, you and I, we are not going to be paying attention to this from the standpoint of exact numbers. And you might say to yourself, how did you come up with that number? And I'm going to explain that. First, we know we still have a rising price oscillator above zero inside the NQ. What we also know that is really important is that the high, which was at one point in time an all-time high from March 13th, has been taken out. Remember, there is nothing more bullish than a failed bearish pattern, and we did inside the NASDAQ composite. The NQ, we did have an island top. Inside the NDX 100, we did have an island top. Those things are long gone. Everybody who was stranded on that island was rescued. And they said, hey, you know what? It wasn't really such a bad boat ride. You stranded us, but we had a good time. We want to get back on this boat and go to higher places. Let's go to our next stop. The next stop is 74.86. Now, in the case of the NQ, it's up above a daily. It's up above a weekly set of market profiles. It's up above the previous high. So now what it wants to do is an expansion. A Fibonacci expansion. The first expansion level inside the NQ is measured by taking the high of March 13th and then that low, and we will not see this low again from April the 4th out there. Prices are not headed down there. Not a chance. Not a single chance. They're headed higher. 74.86 is the 1.272 A to B equals CD expansion. If we look a little further to our right, what you're going to see is the old Russell 2000. And what did the Russell 2000 do yesterday? What did it do the day before? Well, the day before, it closed above a brand new market profile. Then what did it do yesterday? Came back and tested old resistance, found out it's just new support as we speak. As long as Russell 2000 closes above 1675, he wants to go ahead and move up into the 1697 and change level. That would be the 1.618 expansion of its move. And by the way, its move was from the high of March the 13th down to the low of April the 2nd. So as we take a look at this, there's only two of the equity futures contracts that are being just stubborn little boogers, that being the ES Mini. The next level to watch, because it's a brand new profile. It formed today, and it's a bearish structured profile. It's 27.96. You see the ES Mini close above 27.96. Do not be short. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done. which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So Scott writes in, and Scott wants to know the question, or wants to know our opinion, yours and mine, about when to sell from his long position inside Viking Therapeutics. VKTX is the ticker symbol. The chart on our screen right now has got the daily, the weekly, and the monthly TAS market profiles. You can see we're above everything there, so they're not really going to be of assistance on these time frames or for these time frames out here. What I don't know, Scott, is when you actually got into this trade out here. You know, or investment, and maybe that's what it should be, or you should consider it being an investment out here. You can see that it's up above its old highs. Now, I don't know if this was a reverse merger or, you know, when they went public. I mean, back in May of 2015, it was up at a, I should hold on a second here. Let me change this drawing tool so that we can actually see numbers on it. For these purposes, red horizontal line, that will work. And so it's up above the 1023 area. You know, it did it with a wide-ranging bar. That was last month, the month of May. Big volume behind this. You know, why? The question I would ask you, if it was a trade and you were getting in, you're asking me, when should you get out? You know, if it was a trade that you got in and you've got some nice profits, it almost asks you, and I don't know anything fundamentally about this company out here, but you might ask the question, you know, why wouldn't you just simply get your principal back and stay with this trade out here? As far as patterns and everything that we take a look at as I speak right now, if I were going to try to find anything that is of concern, it is on a daily basis and prices moving higher doing less relative energy. You can't exit this trade. Well, you can do anything you want, but you shouldn't exit this trade because of that pattern until at least you see some type of bearish reversal signal or at least a close below Stevie's red line. And presently that's 10.06. Maybe from 10.06 to 11.80, that's the type of bread you don't want to go ahead and get rid of. You know, that's like a 10% if you're thinking in percentage terms out here. But just technically speaking, on a daily basis, it would need to close at least below Stevie's red line out here for you to do that. If I go down into a really short time frame, and I don't know what's really short to you, I'd say when you're looking at individual stocks, really about the only time frame that you can really use that makes any sense, or any sense to me, would be a 30-minute time frame out here. And that's because the day is split into 6.5 hours. So what good is it going to do me to do a 2-hour chart with 6.5 hours? Just the math doesn't work there, right? So increments of 30, at least I can look at how things are trading every 30 minutes. It is through the daily trading session of 9:30 to 4. At least wait until this thing starts making lower highs and lower lows. Just put it on that type of a short-term time frame chart out there. If you're really concerned and you're trying to, you know, time this and figure out when to possibly get out of ticker symbol VKTX. So I hope that helps you out there. But either way, you know, you're in a winning trade, and all we can say there is if we could play the applause button, we would do so. So congrats on that. Any other questions? I don't see any other questions out here. But looks like maybe there's one. Euro currency been bouncing between 115, 118 past weeks. Appears big money waiting, big money been waiting past 7 days and shorted huge with the pop. What's my outlook? So let's just go take a look at the time frame charts out here for the euro. I'm going to look at the futures contract just since I don't have a delay on it. We could go look at the currency pair, but I'm going to look at least for the moment. We're going to go take a look at the September contract for the euro. And my take on it is this. We're trading at about 117, 1.1714 to be exact. And this is a daily time frame chart. So one of the things that we did, and I went ahead and sent off an email to somebody that I knew because he had written into the show, and the day before was asking me, you know, where the euro was going, and he was playing it from the short side. And on the trading session, I believe it was this day here was either on May 30th or on May 31st, whichever day. I think it was probably May 31st. I just simply sent an email and said, you know what, you probably want to close that short position out. And the reason was because all of a sudden price was moving above Stevie's red line. We had seen that Stevie's red line had acted as resistance all the way down. Turns out that was a good move out here to have actually done that. We still have, or it still has, a rising price oscillator, albeit below zero. So what would you do if you're not in this trade right now? Then you wouldn't really get in the trade. If you wanted to short, then what you would do is you would short if price closed below Stevie's red line. That number is 1.1671. The reason is because then this would have been just nothing more than a little bit of a relief counter trend rally. You'd be back to a falling price oscillator below zero, and that says you go run back for the lows and maybe lower. Well, that's what the daily time frame chart shows. Remember, each time frame that we look at is going to provide you with a different piece of information. In the case of the euro, probably a lot of the work is actually done for the time being. In other words, maybe there's not really going to be any substantial movements over the next several days out here, maybe even really the next several weeks, since we have the ECB who's spoken, since we have our Fed that has spoken, and those would be the two central banks that in essence would rock the world of the euro. If we take a look at the weekly time frame chart, we can see that price oscillator is nearing zero. It's not at zero, but what's going to occur over the coming weeks is that we're going to see price and Stevie's red line on a weekly basis catch up to each other. And that is where the euro will reveal to us what its next move is. Now, that's up at the 120 level. And it is still possible that the euro could bounce all the way up to that level before we really get its next message. It's possible that over the coming weeks, the euro just moves sideways. Stevie's red line continues to move to the downside out here. We do know, in looking at the futures contract, that the euro has support at these lows out here. We're trading with inside the box. If I look at the monthly time frame for the euro futures contract out here, let's go ahead and let that populate. Looks like that's going to take a moment or two. But again, the time frame is really what matters. Now, see here, the time frame is that Stevie's red line is being tested. So if by big money you think that those are the folks that have the long-term horizon, and they were just simply looking forward to just shorting this bounce, then they're back in. Because what you have is you've got that price oscillator sitting right at zero. You can see the reading on the bottom right-hand panel of my screen. It says 0.00116. You're basically at zero, and price right now is trading below Stevie's red line. Looks like that number is 1.1760. Now, the month is not over. It's only the 14th. But if, in fact, we see at the end of this month being June, price close underneath Stevie's red line, and more importantly, between the bottom of its bullish structured monthly box out there, and that number is, can I get that number for you here? Can I do it? I can do almost anything, which is pretty cool. 1.1679. So those are the numbers to be paying attention to as we speak right now. With regard to the euro, again, I was looking at the euro futures contract out there and the September contract in order to make those decisions. This is Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, send in your cards and letters. Would like to be able to look at whatever it is you want to look at out there. Something in your portfolio, something you're thinking of, whatever it might be. Steve at TFNN.com, just in that subject heading, put radio show question. The chart that, or the charts that we're looking at on my screen right now are the comparisons of the equal-weighted ETFs for the SPYs, that's on the left-hand side, RSP, versus the SPY itself on the bottom panel, and the QQEW, the equal weight for the Qs out there. That's in the upper right. The lower right is going to be the Qs themselves. Now, you want to keep your eyes on the upper right-hand panel. Of all the panels that are most important on this screen, it is the QQEW. And what you're looking for is you're looking for a confirmation that, in fact, the NQ wants to head up to that lofty figure of the 1.272 expansion, and you will get that confirmation. Doesn't have to happen today, by the way, if and when the QQEW closes over the high from January 26th. It's the equal-weighted version. That way you can, every individual equity in there is weighted the same. Versus Apple being where 12% and Microsoft 8 or 9 or whatever the numbers are, the top 10, being 60 some odd percent. Each one gets a single vote out there. And the reason that you pay attention to it is because the equal weight always points the way, especially when it takes up prior swing points, in this case here, an all-time swing point high, basically. And you can see that price is moving up there. So the generals are doing the troops are doing the work. The generals, they continue to do the heavy lifting out here. And in the case of the RSP, that broke above a prior high, which said, hey, the S&P 500 is in fine shape to continue moving higher. I did mention that inside the ES Mini, there is some resistance, so you want to watch that. You want to watch to see if that can get taken out. Again, that was 27.96. It's not that high above where we're trading. We're about 27.90, 89.50 as we speak right now. So it's not inconceivable for it to take that level out. The Dow number, top of its box, brand new profile as well, and we'll give you the bottom of that, which is 25,001. The top of which is 25,418. 25,418 is the number. So right now that's contained resistance, isn't bearish. It just simply its next level that price needs to clear. It is the ES and the YM. So it is the S&P and the Dow. They're the only ones that have any kind of clear resistance in sight. Otherwise, the other indices, the other equity futures contract, NQTF, they have price objectives, to continue moving higher. If I look for anything else that is of interest here, we haven't talked about gold, but gold had a decent move. It's still just consolidating sideways. But gold priced in other currencies, those being pounds right now, is trading above, slightly trading above its swing point high, and that's from the trading session, its recent swing point high. The one that I would use would be October the 12th. So if it can clear that, that bodes well for gold. In the case of yen, it's not up to its most recent swing point that I would be focused on and paying attention to. That date of that specific swing happens to be May the 11th. It's heading up that way. In the case of the euro, the date that I'm looking for is September 1st, 2007. You still do have gold priced in these currencies moving higher. When you can get all of these instruments moving in the same direction at the same time, that's good. Everybody's voting here. But you still have to be able to clear some resistance out there. And gold price in dollars really hasn't done that. Does it matter about the U.S. dollar index? It adds to the equation. But is that the sole function of making a decision as to what gold will do. Heavens to Betsy. Where did heavens to Betsy come from? Heavens to Betsy, no. We just simply want to see assets, whatever they are, moving in the same direction in all major currencies. So there's an inkling of hope, a smidgen of hope out there for Goldilocks. It's just not there, not just yet. So what else is it? What are we going to do for the next 26 minutes or so? Because there's really, I don't know what else to cover and provide to you as much as I would like to, and I do want to. Let's just start picking apart some of these individual equities out here. If you've got an equity you want me to look at, just give me a holler. Let's go take a look at Google. Let's go see what it's doing. Trading up at the 1165 area. So this is above a prior high. That high taking place on, let's get our data box going. That high taking place on June the 5th at 1.6 million shares. So what the what Googly one is doing is taking out prior high with volume. Now, if we go a little bit further left on the chart out here, we're going to see where the real resistance is. Let's go ahead and draw a line out there. The resistance really coming from the gap to the downside that took place on February 2nd. The resistance level, you can see how it's acted as resistance based upon the other tests up there, is 1169.36. That's $4 away, $4 and a penny from, in essence, where we're trading right now. What happens if Google closes above 1169.36? Then old resistance may become new support. Volume-wise, the last time that Google was up here was on the trading day of March the 13th. There was 2.1 million shares. Actually, at 1:30, you've been trading for, what, 4 hours, so it's probably not going to equal or exceed that volume, but the volume is not that shabby out here. There's no way Google's going to be able to deal with the volume from the gap to the downside of 2 on February 2nd, which had 6 million shares, but it's looking mighty good, and you have to admit, what you've got right now, since the bottom, is a series of higher lows and a series of higher highs. So in the end, what does that mean to you and I with regard to Google? Google's going to go attack that 1169.36, and if it closes above that wall out there, because you want it on that wall, then it's going to go make a run for its highs, those highs being the January 29th level. And if you take a look at that volume out there, that was only 1.5 million shares, so it shouldn't have any problem taking that volume out. On a daily basis, on a weekly basis, prices above both the TAS daily and weekly profiles out there. So Google looks pretty good. What it's going to do is it's going to go attack that 1169 level. Let's go take a look at Mercado Libre. Just because I like saying that name, MELI is the ticker symbol. That's up 15 bucks or 5%. Its chart nowhere near as pretty as the googly one, so we're going to have to go switch over to Stevie's other charts to ask that question. Hey, did Mercado Libre make a bottom? So let's go take a look at it on a daily time frame, because that's really the time frame that you and I are looking at, and the answer is going to be may have. Let's go take a look at how we can derive that. And the way that we derive that is we can see that price was moving lower, doing less relative energy, very much like the high out here. And it was doing that on the trading session there of May the 30th. We did get our first bullish reversal candle. The first one took place just a few days ago, June 12th. That tells you the cavalry is really trying to defend this position. They want to go ahead and turn around Mercado Libre, MELI. Today, you've got that same or another bullish reversal candle out there. So it is protecting those lows. So for those of you looking to get into Mercado Libre, now is the time. Do you have the Doble Gee confirmation? You do not, but price is trading above Stevie's red line. And it's at least going to head up to the top of its box. That's 319.06, maybe a tad higher than that. You close over that, and then that tells you Mercado Libre on its daily time frame has formed a bottom with a move up into the 340 area. Ticker symbol there is MELI. Steve Rhodes with TFNN. It is U.S. Open Thursday. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD. Directions Daily CSI 300 China A-Share Bull and Bear ETFs. China A-Shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the question reads like this. I bought Watt, W-A-T-T, this week at 1630. Does your work say I'm crazy? No, I think you're crazy about Watt, which is Energous Corp out here. So as we take a look at it, here's what we know. You can see that this thing had a giganto break to the upside, massive volume. I don't know what Energous Corp does out here, but they've got a lot of energy. That took place here on December 27th when this thing gapped higher with 42 million shares out there. So something big happened. And, you know, what you like to be able to do is buy things that eventually come back to a breakout area where gaps are your friend. So you've bought this back down towards the bottom of that or the top of that gap out there at 1530. There's a brand new profile that formed. So you bought it this week. And we can see that the box in this profile is between 1610 and 1720. So that seems logical. You should get a bounce to 1720. You really want to see price close above that level because that is resistance. And you don't want to see it close below 1610. Of course, if it does, where does price head back to? Well, then you have to go all the way back to the April 4th swing point, which had volume there of about 592,000 shares. And that price area is about 1390 to 1473. So are you crazy? No, I think you're just crazy about buying a breakout. You've also got support on the weekly profiles. So on a weekly basis, and though it looks like we were looking at the same thing, we're not. 1610 to 1720. Now, the structure of this box has a bullish structure. So 1720 is a number to be keeping your eyes on. Okay, you've got those numbers. What else do you need to see out here? What would you like to see? Well, to make sure that this thing is ready to move higher, and this is no counter trend rally or anything, you want to see price close over Stevie's red line. That number is 1678. The reason being is as long as it trades underneath 1678, you still have a falling price oscillator below zero. Not the ideal conditions. When you're buying bottoms, you want to see price trading above Stevie's red line so that the price oscillator begins to rise. It is not rising as we speak just yet. That says, well, go take a look at the weekly chart. If you're flying a plane, you want to know what's overhead. And as you take a look at the weekly chart, you've got resistance at the 1841 level out here. So are you totally out of the woods? Not necessarily. But look, let's just simply fall back to just standard tactics. There was a huge breakout in this thing, and you just simply are trying to play along with what that reason was behind that breakout, and you're finding spots to go ahead and take a long entry. And it seems to me like that is as good as anything. You just don't want it to close below those lows out there, because then, or maybe it's not a full position, and if it does, you go ahead and you add to it. So that's what I see when I take a look at WATT, the Energis bunny out there. Unfortunately, there's no reason for you and I to go take a look at RF wireless. I like that. I bought a RF wireless system this past weekend and started installing it. It's kind of amazing stuff out there. In any event, don't think it was one of their systems, but who knows? The monthly, the reason we're not looking at the monthly is because profile-wise, you're right in the middle. So it's not providing you or I with any information. So thanks for that question. Much appreciated. Let's go to the next question from Tim, who wants to take a look at TPC. That is the Tournament Players Course, and that is a blast to play. Of course, there used to be just one of them. That was back in like 83 or so when they opened up the TPC in Ponte Vedra. But now there's TPCs all over the place. But that's not really what Tim was asking. Tim was asking the question, where do you see an entry for TPC, and is it close to the bottom? So here's what we know when taking a look at the daily set of profiles, the weekly and the monthly. It's trading below the bottoms of all those. So that's always a bit of risky business. What a great movie that was it not? Risky Business. Anytime you dump a 941, a Porsche 941 into the water, it's got to be a relatively cool movie out there. So what you're going to be watching for out here, since you're not in this equity and it's continuing to move lower, Tim, what you'd like to see it do is actually get down and test the low from May the 10th that had volume of 1.3 million shares. You're not down there quite yet. That's at 1890. Ideally, if you're hankering to get in on Tudor Perini, which is a big construction company. I think they're headquartered in Las Vegas. Maybe they're not, but they certainly built a lot of the hotels that were out there, probably still are. You'd like to at least see those lows get tested. No reason for you or I to believe that they won't. If you do see a test and rejection, well, then maybe you have something. You could be an early entrant into that. It's going to be you and everybody else that's watching the test of that level. So that's what the daily time frame. You can probably gauge that low on a weekly basis as well. The volume there you're going to be measuring on a weekly basis at that level is going to be comparing 1.3 million shares against whatever it's doing. Hey, for the week so far, you've done 143,000 shares. So it looks to me like maybe the sellers have gone. But at this stage of the game, there's not a lot of buyers yet, and I know you want to be one of them at Tudor Perini. If we take that chart and we come over, we take a look at what is the TPC. Should be easy to remember. And let's go take a look at the daily time frame chart out here, see if there's any kind of bottoming signal here. And the answer would be, I don't think today's candle's a hammer, so my chart will catch up in a moment. You know, it looks to me you're trading below the, I just think you're going to get a test. You're going to get a test, Tim. That's my call. That's what I'm sticking to. Wait till you get that test before you decide on doing anything else in ticker symbol TPC. But as long as you're at it, go play a TPC course. They're usually in pretty darn good shape. We've got a question here from Lee B. Lee says, hey, Steve, can you give your current thoughts on Bitcoin? Is today's move mark a bottom or just a counter trend rally out there? Let me do this for you, and I'm going to fill in for Tom during the 3 to 4 hour. So, and I'll have more comments on Bitcoin. So I'll contain myself to, hey, Steve-O, what are the futures contracts doing right now? And it looks like maybe the futures contract has rolled over to September. Let me check this out real quickly here. This one that I'm referring to is the CBOE. And now I'm going to go back to let me go back to the June contract. Maybe it has not rolled just yet. Is it near a bottom? If I'm looking at a 60-minute chart, my answer to you, Lee, is going to be no. And I'm going to go to a 30-minute chart. And my answer is going to be, I don't know. You're trading inside a profile, bullish in structure, said that Bitcoin, if you take a look at XBT, that is the CBOE Bitcoin futures contract, says this thing could bounce to 64.55. That's a couple $100, no big deal. That would just be testing resistance. You want to see it close above one of these TAS market profiles, the top of them, in order to at least give an inkling that this thing has formed a bottom. Unfortunately, for whatever reason, this exchange data isn't getting into my other white background charts. Otherwise, I would take a look at that and I could give an even more emphatic answer out there. I'm trying to resolve that, but haven't been able to resolve that. Now, if I take a look at the CME contract out here, different story. So maybe the CBOE, it is rolling out. You know, I don't trade Bitcoin, but I'm going to do the best I can to answer your question. If it's formed a bottom, and it's trading right now on the futures contract at 65.75, you need to see it close above 68.44 to give you that glimmer of hope. So, Lee, thanks for writing in. Listen to my segment. It'll probably be during the opening segment at 3 o'clock, and I'll cover another piece of information that you really want to know about Bitcoin. Steve Rhodes with TFNN.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the next question coming in from Dave R. from California. And Dave, thanks for listening. Thanks for writing. And Dave is asking basically about rates rising, the TLT or trading, the opposite of that, I believe the inverse TBF, and is the question out here. And so, Dave, in order for me to really answer the questions with regard to those ETFs is really to take a look at the underlying instrument as best we can. Now, the TBF replicates the 20-year. I'm going to go take a look at the 30-year out here and kind of use this as a base guideline. And the question is, where are we at now? Now, you do have the 30-year Treasury that is trading up a bit this afternoon. And unfortunately, as we speak, you can see that this thing has been redlining, meaning it's been trading at the zero level of which is the red line on my chart of its price oscillator for quite some time. And so it's somewhat directionless, just moving sideways. Now, I would tell you that today's interpretation is that the 30-year Treasury wants to move higher, and it would want to move higher into about the 145-ish area. I would need to see tomorrow's trading inside the 30-year Treasury to confirm that, because we've just been flatlining here around this area. It's just tight. It's tight. It's wound tight. I was going to say tight wound, but it's wound tight out here. So you know, and if I look at the weekly time frame chart, the weekly time frame chart says, you know, I can see the 30-year wants to also rise. You can see price this week and last week have done nothing more than test Stevie's red line. So that is support. So I just don't have enough information right now to the information I do have says that the 30-year wants to rise out there, even in the face of rising Fed funds rates out here. But let's keep those two things separate from each other. Well, folks, the day has ended. Not really. I'm going to be back in another hour, so please join me at 3 o'clock live for the Tom O'Brien Show, only I'll be sitting in for him. And if you can't, well, thanks for being here anyway. Stay tuned. Your favorite polar bear, David White, he's up next. I'll either see you at 3 o'clock or back here tomorrow at 1. Take care. Thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.